The market is currently closed. As of the closing bell on Friday, October 3rd, 2025, Lithium Americas Corp, trading under the ticker LAC, closed at a staggering $9.04 per share. This represents a monumental intraday gain of $2.18, or an astonishing 31.78%. A move of this magnitude in a single trading session forces everyone to stop and pay attention. The immediate surface-level expectation is simple. A volatile mining stock did what volatile mining stocks do. But the reality of what propelled this surge is far more significant and signals a foundational shift in the company's trajectory, a shift that many investors have not yet fully grasped. This wasn't just a random spike, it was a seismic event driven by a powerful convergence of corporate strategy and national interest, fundamentally altering the risk equation for anyone considering an online investment in this company. The common belief is that all lithium stocks are a straightforward, albeit speculative, wager on the electric vehicle boom. You buy a company like LAC, you put it in your individual brokerage account, and you hope the global demand for batteries pulls it higher. That narrative, however, is now dangerously incomplete. The 31% surge was not about the general EV trend. It was a direct reaction to news that the U.S. government itself is stepping in, not just a regulator, but as a strategic partner. This changes everything. This is no longer just a mining story. It's a story about the weaponization of supply chains and America's urgent push to secure its own critical resources. Let's dissect the extraordinary market action we witnessed. On Friday, over 191 million shares of LAC changed hands. To put that into perspective, its average trading volume is closer to 26 million shares. This wasn't a gradual uptick, it was a tidal wave of capital flooding into one specific stock. This level of volume tells you that the participants were not just retail traders piling in on the Robinhood app hoping to catch a wave. The sheer size of the order flow suggests that large institutional desks, the kind that executes trades through platforms like Interactive Brokers for their high-net-worth clients and hedge funds, were aggressively building positions. This was a clear signal of conviction from major players. The price action itself told a compelling story. The stock gapped up significantly at the open, indicating that buy orders had piled up before trading even began. Throughout the day, it pushed higher, setting a new 52-week high of $9.33 and demonstrating relentless buying pressure. Every small dip was immediately bought, a classic sign that algorithms and active managers alike were determined to accumulate shares. This kind of sustained high-volume rally is what separates a fleeting news spike from a genuine re-rating of a company's prospects. For those practicing self-investing through platforms like SoFi Invest, recognizing the difference is paramount. The catalyst was the announcement of a definitive agreement with General Motors and the U.S. Department of Energy regarding the first draw on a massive DOE loan to develop the Thacker Pass project in Nevada. More than that, whispers and reports intensified that the government was considering taking a direct equity stake in the company. This is the piece of the puzzle that the market is now desperately trying to price in. A loan from the DOE is one thing. It provides capital and a stamp of approval. But an equity stake is a whole other level of commitment. It would make the U.S. government a part owner, directly aligning its interests with the success of Thacker Pass. This dramatically de-risks the venture from both a financial and a political standpoint, a reality that far exceeds the initial expectation of just another miner getting a loan. So, what exactly is Lithium Americas? And why is its Thacker Pass project suddenly at the center of this firestorm of activity? At its core, LAC is a pre-revenue lithium development company. It doesn't currently sell any product. Its entire valuation is based on the future potential of its assets. This is a critical distinction that many who are new to online investing need to understand. Unlike an established company like Apple stock or Nvidia stock, you are not buying a piece of current earnings. You are investing in a plan, a project, and a team's ability to execute. The company recently underwent a strategic separation, spinning off its Argentinian assets into a new entity, Lithium Argentina. This left the new LAC a pure-play U.S. lithium company, with its crown jewel, the Thacker Pass project in Humboldt County, Nevada. Thacker Pass isn't just any lithium deposit. It is the largest known lithium resource in the United States and one of the largest in the world. For years, the project has faced hurdles from environmental protests to the sheer capital expenditure required to build a mine of this scale. The expectation among many investors was a long, arduous road with an uncertain outcome. The reality, however, has been reshaped by geopolitics. The global pandemic and rising tensions with China exposed the fragility of America's supply chains, particularly for critical materials like lithium, which is the irreplaceable heart of modern battery technology. The U.S. government realized it could not be dependent on foreign adversaries for the resources needed to power its next generation of transportation and energy storage. Thacker Pass transformed from a promising geological asset into a national security imperative. This is the context behind the DOE's involvement and why this isn't just corporate welfare, it's strategic industrial policy. For investors using services from Fidelity, whether it's their powerful trading platforms or their diversified Fidelity ETFs, understanding this top-down governmental support is now a crucial part of the due diligence process. The history of the stock itself reflects the difficult path of a development stage miner. It has been a roller coaster for shareholders, trading as low as $2.31 within the last year. The journey has been marked by periods of intense optimism, followed by crushing doubt. Many investors who tried to time the market were shaken out. But for those who understood the long-term strategic value of a domestic lithium supply and held on, the recent surge is a powerful validation. Comment below if you've been holding shares of LAC since it was trading under $5. The patience required to see a project like this through its early stages is immense, and it's a testament to a belief in the bigger picture beyond short-term market noise. The risk was that Thacker Pass would remain a stranded asset, a treasure in the ground with no viable path to extraction. The new reality is that it has become a cornerstone of America's plan to achieve mineral independence, with the full backing of the federal government and a major automotive partner in General Motors. This support system provides a powerful tailwind, making the investment proposition fundamentally different than it was just a few weeks ago. Investors looking for investment help or considering automated platforms like Schwab Intelligent Portfolios need to factor this new reality into their models. The risk has not been eliminated, but it has been significantly mitigated. Looking ahead, the future outlook for Lithium Americas is now irrevocably tied to the execution of the Thacker Pass project. The bull case, which was once a distant dream, is now a tangible possibility. The common expectation is that as the world transitions to EVs, lithium demand will skyrocket, and LAC will be a primary beneficiary. This is true, but the deeper reality is more nuanced and offers even more potential upside. The immediate catalysts to watch for are not broad market trends, but specific, tangible milestones. The first draw on the DOE loan is just the beginning. The market will be watching for progress on the construction of the mine, the successful implementation of their extraction technology at scale, and any further offtake agreements with other automakers. Each of these steps will serve as a de-risking event, likely providing further upward momentum for the stock. The involvement of the government and GM also opens up a world of possibilities for further partnerships and financing, making the path to full production smoother than previously imagined. This is the kind of project that could attract institutional capital into various Fidelity funds focused on green energy and domestic resources. Of course, no investment is without risk, and it would be irresponsible to ignore the challenges that still lie ahead. The reality of mining is that it is incredibly difficult. There are always risks of operational setbacks, technical challenges, and cost overrides. The price of lithium itself is notoriously cyclical and can be volatile. A global economic slowdown could temporarily dampen demand for EVs and, by extension, for lithium. Furthermore, while the current administration is clearly in favor of this project, political winds can change. A future administration could have a different set of priorities. Although the broad bipartisan support for onshoring critical supply chains suggests that the strategic importance of Thacker